I have to admit, I'm generally not a huge fan of investing in stocks just for their dividend. But for Malaysian stocks, it's actually my preferred way to invest. So in this video, I'll talk about my favorite high dividend stocks that are listed on the Bursa stock markets. So I'll run through some blue chip companies, I'll run through some REITs, and I'll also run through some companies who are already paying a high dividend, but also have some good growth prospects. By the way, this isn't advice for you guys to go and buy these stocks directly. In fact, some of these stocks have made pretty big runs in recent times, so now might not be the best time to buy them. I'm just sharing some names that look interesting to me, but even I don't own all of these stocks in my own personal portfolio. So yeah, just do your own due diligence. I will also share some metrics that I look for when screening for these stocks, so you can also use this method to go and find some different names that you like and you can invest in yourself. So in coming up with this list, there are a few things that I considered. The first one is obviously the dividend yield, which is the entire theme of this video. And for those of you guys who don't know, dividend yield is essentially how much dividend this company pays out per share divided by the stock price of that company. So let's say a stock is trading for 10 ringgit right now and they give out a dividend of 1 ringgit per year. 1 ringgit dividend, 10 ringgit stock price, it means that the dividend yield is 10%. Then the next thing that I look for is their track record in terms of paying out these dividends. I'm not looking for names who give out 200% dividends, because obviously that's not sustainable. There's no way a company can have a dividend yield of over 100% for the long run. I'll save that kind of gambling for my crypto portfolio. So yeah, what I'm looking for are companies that have shown a track record of at least a few years showing consistent dividend payouts, and it's even better if they're growing these dividends. Then I look at their payout ratio. So this is important for us to know when investing in companies for dividends, because we need to know whether these dividends are sustainable over the long run. So payout ratio is essentially how much of their total profits are they paying out in dividends. So let's say a company earned 100 million ringgit in profits and they pay out 30 million ringgit in dividends. It means that they have a 30% dividend ratio. And what it also means is that the company is stingy because they're not giving out all of their profits, and we shouldn't invest in them. Just kidding, it's actually a good thing. It likely means that this company wants to use some of their profits to maybe reinvest for future growth. But what it also means is that this company has the potential to increase their dividend payouts in the future if they wanted to, because they still do have some leftover profits. If you compare this to a company who's giving 100% dividend payout ratio, what that means is it's good because we're getting all their profits as dividends right now, but if in the future, let's say, if their earnings start to go down, then the dividend payouts will also start to go down. So what we're looking for is essentially companies who are giving good dividends, but their dividend payout ratio is not so high, and most likely we don't want to see dividend payout ratios that are above 100%, because that means that they're giving out more dividends than they actually earn in profits, and that's not sustainable over the long run. The final thing that I look for in these stocks, I would say it's not so important for dividend investing, but I still like it, it's still a plus, and that is if these companies are growing in terms of their revenue and profits year over year. Like I said, it's not really a necessity because some of these companies, they're already massive and they can't grow any further, but they can still pay you a good dividend yield. This is just a plus for me. If a company is doing that, then it's even better. By the way, if you guys want to invest in Malaysian stocks, then check out Rakuten. They're the only broker that I use right now for my Malaysian stocks because their commissions are pretty low, especially if you're a newer investor with a smaller amount of capital. Using the same platform, you can also invest in stocks from countries like the US and Hong Kong, and they frequently come up with market and stock research reports, so you guys can get ideas on what to invest and trade in from these three countries. So yeah, if you guys want to sign up, then use the link, I'll leave it down below. You'll get some Rakuten points and you'll obviously be supporting the channel as well. Alright, so the first company that I will be talking about is the dividend king of Malaysia, or what I consider to be the dividend king of Malaysia, and that is Maybank. So whether we like it or not, the Malaysian stock market is still dominated by the financial industry, and the three largest companies listed in Malaysia are all banks. It's Maybank, Public Bank, and CIMB. Out of these three companies, my favorite for dividend investing will have to be Maybank. Maybank is actually the first stock that I ever owned in my life. I deposited money into Rakuten and I bought Maybank as my first ever stock. So I have some sentimental value attached to this. But obviously, that is not the only reason that Maybank is in this list. Over the last 4 quarters, Maybank has paid out a total dividend of 59 cents per share that you own. At the current price, that's a dividend yield of 6.37%. If I was rich and I had $1 million, I would just buy 100,000 Maybank shares and collect 59,000 ringgit in dividends every single year. That's around 5,000 ringgit a month, completely tax-free. That's truly the dream for me, just living off Maybank dividends. But first, I got to get to $1 million. And if we're looking purely at dividend yields, Maybank is actually giving a higher dividend than even ASB themselves. In fact, a large portion of ASB's dividends that they pay out to all of the ASB investors actually comes from their investment in Maybank. So I did some quick research based on my quick math. In 2022, ASB paid out a total dividend of around 9 billion ringgit, and of that 9 billion ringgit, 25% of it came purely from Maybank dividends because ASB is a large shareholder in Maybank. But we got to remember that investing in ASB and investing in Maybank stock is completely different. Maybank, I would say, is a pretty low risk, low reward play. Their stock price doesn't move so much, but you got to remember that the stock price can move and you can lose money investing in Maybank. So even if, let's say, we get a 6% dividend from them, if the stock price declines by more than 10%, let's say for a year, then net you will still lose money. Compare this to investing in ASB, the price of your investment, it won't move at all, meaning that you technically cannot lose money, you will just gain dividends every single year. So yeah, it's just for fun, doing this comparison, but investing in ASB and investing in Maybank, it's not the same thing. Also, Maybank isn't the only bank that's giving out high dividends in Malaysia. In fact, nearly all of them do. Another one that I considered was RHB because they have a dividend yield that is slightly higher at 7.17% and their payout ratio is also lower at only 57%. So for me, this is purely a personal decision. So, I'm a user of Maybank, I have a lot of their products and I really like their products actually. So, I've used many different digital banking apps, but my favorite is still, Maybank with their May app. I think it's super easy to use and I do think that Maybank is doing very well in this digitalization space. I do have credit cards from other banks and I do use their apps. I just don't think that they're quite at the level of Maybank right now. So yeah, you could choose to invest in other bank stocks instead. A lot of them, like I said, give you high dividends as well. And you pretty much have two choices. You can be like me and just choose whichever is your favorite bank in Malaysia and just invest in their stock. Or you could actually do research and go and find out which of the bank stocks in Malaysia is currently offering the best value for the current share price and then invest in that instead. It's completely up to you. Next up on this list is another blue chip company, another company that's also in the FBM KLCI, and that is Sime Darby Berhad with a dividend yield of 5.3% and a dividend payout ratio of less than 50%. By the way, there are also other Sime Darby companies listed on Bursa, which is Sime Darby Plantation and Sime Darby Property. But the one that I'm talking about right now is Sime Darby Berhad. By the way, literally just yesterday, I went to Wanatama and I found out that Sime Darby Motors has a pop-up store there, I think. And they have their full range of electric vehicles from brands like BMW, BYD, and even Hyundai. So these are all brands that Sime Darby Motors carries. Not gonna lie, those cars were pretty sick. In fact, I do think that I want to buy one of those cars in the future because EVs are pretty cool, but that is not the reason that Sime Darby is in this list. So they recently completed their takeover of UMW, which means that now they're also adding Perodua and Toyota to their portfolio of cars that they manage, I guess, in Malaysia. Previously, they only held more premium brands, I would say, like BMW and Mini, and obviously those are targeting more of the higher income segment of Malaysians. So yeah, with the inclusion of these two brands, with the acquisition of UMW, the market share for Sime Darby Motors is going to go from 3% to over 50% in Malaysia. And that's obviously because Perodua is the most popular car brand in Malaysia. And apparently, I didn't know this, but Toyota is the third most popular car brand in Malaysia. And I honestly thought that, Malaysians wouldn't be buying so many cars anymore, in 2023 because higher inflation, economic pressure, higher interest rates. These are all reasons for us not to buy new cars. But apparently I was wrong because car sales in Malaysia rose by 11% to nearly 800,000 units in 2023. And this is one of the reasons that I like Sime Darby and why it's in this list. Even though they're already a big blue chip company, they still have room for growth and they're still growing over the last few years. So in the last 2 quarters, they managed to increase their revenue by quite a decent amount. But the more important part is that they managed to double their profits in those last 2 quarters from a year-over-year perspective. And obviously, with the acquisition of UMW, their revenue and profits will continue to grow by even more. But the only thing that they will have to manage is higher debt, which is something that I think they can work around. Moving on to the next stock that I'm going to be talking about. And when we talk about the highest dividend stocks in Malaysia, we just can't miss out on REITs because, Malaysian REITs pay out a pretty good amount in dividends. So, like the banking sector, there are just so many REITs out there right now that's giving you a high dividend yield. But if I had to choose one, I would probably choose Pavilion REIT with a dividend yield of over 7%. Like I said, there are many REITs out there for you guys to choose from, but just from a personal point of view, I would rather invest in real estate in the commercial and hospitality sector rather than the commercial sector. So the reason for this is that I'm just looking at countries like US, Europe, Japan, China. all of these countries are actually having a bit of a real estate crisis, and this comes mainly from commercial real estate. So this hasn't come to Southeast Asia or even Malaysia, and I don't think that it will, but I'm just playing it a bit safe right now. Also, I think in the future, this is just again a personal opinion, I do think that the future of work will be a bit more hybrid rather than everyone working from office. So again, this will be something that is not so good for commercial real estate. Also, as Malaysia tries to push for more tourism, this will obviously be good for the retail and hospitality REITs as well. You know, obviously, hopefully that these tourists come in, they stay in our hotels, they shop in our shopping malls like KLCC or whatever it is. So yeah, it can be good for REITs in this sector. But even within this sector, there are other choices for you. Sunway REIT, IGB REIT, these are also good options for investors out there. I actually like IGB REIT because I go to Mid Valley quite often. But the reason that I didn't choose IGB is because they mainly have two properties, which is Mid Valley and the Gardens, and they're pretty much next to each other. So I'm not saying that anything can go wrong because they're next to each other, but I would prefer a more diversified approach. So my choice by a slight margin will have to be Pavilion REIT. Recently, they just announced their best quarter in their history, and that is mainly down to the opening of the new mall, Pavilion Bukit Jalil. And it's not just Pavilion Bukit Jalil, pretty much all of their properties have seen a revenue growth in the last quarter, with the exception of Diamond Mall. So I've been to that mall, it looked pretty dead to me. But yeah, aside from that mall, all of the other properties, they are growing at a pretty good rate. Having said all of this, I'm actually not a huge fan of REITs as a whole. So I know I said that I prefer retail REITs over commercial ones because, I would rather not be in commercial real estate. I think that shopping malls and all have a bigger chance. But the truth is, I just don't like going to malls. And there's, so many malls in Malaysia popping up. There's like Lalaport, there's TRX. They're nice malls, but don't we have too many malls already? But again, this is just my opinion. Obviously, I'm not the majority because every time I go to one of these shopping malls, they're always full. Hiya! And if they're full, it means that these companies are making money. It means that they can give us higher dividends. So just invest, I guess. By the way, another REIT that I also considered is the Al Akar REIT with a dividend yield of 5.8%. And the reason that I kind of like this one is because it's in the it's in the healthcare sector. Yes. So let's say if we get into a recession, if let's say global economy is in a bad state, we're in a recession and stuff like that, people can and they will cut down on shopping, but you can't cut down on your healthcare bills. If you have to go to the hospital, you have to pay up anyway. So yeah, another good thing about this REIT as well is that it is Sharia compliant, which is good for Muslims. And the final stock that I will be talking about today is a name that is a lot less popular than all of the other names I was talking about earlier, and that is Yuchitech. I don't know if you pronounce it Yuchitech or Yukitech, but regardless of how you pronounce it, their dividend yield is at a huge 7.55% over the last 4 quarters. One thing that we need to keep an eye out on though is that their dividend payout ratio over the last 4 quarters is slightly over 100%. To me, this isn't a huge deal breaker because it's not way over 100% yet. And also I did some research over the last few years. Their dividend payout ratio hasn't been this high in at least a few years. This is just the first time, so I think it's just a one-off. This company, I'm going to call it Yuchi Technologies because that's just how I prefer to call it. But they specialize in electronic control systems and apparently coffee machines. So I'm not a huge fan of coffee, so I don't know about this stuff, but I know that their major customers include Jura and Nestle. But the reason that I like this company and the reason that this company is on this list versus all the other high dividend counters in Malaysia out there is that this company has been growing consistently over the last 10 years. In 2013, this company did revenues worth 93 million ringgit, and in 2022, they managed to increase this to 214 million ringgit. That's pretty good, right? That's more than 2 times revenue growth in this 10-year period. But the even better thing is that they managed to more than triple their profits to 125 million ringgit. So they're not just growing their revenue, they're also growing their profits. And if you guys missed that, their profit margins are just insane. So in the latest year, 2022, 214 million ringgit in revenue, 125 million ringgit in net profits. That means that their net profit margin is nearly 60%, which is incredibly high. So yeah, this is a company that is growing their revenue, growing their profits, and they also have a very high net profit margin. So what this means is that if they can continue this over the next 5-10 years, it is very likely that they will also increase their dividend payouts, which is good for us if you're a dividend investor. A friend actually told me about this stock sometime last year, I think, but I didn't buy it because I was waiting for a dip to come, but the dip never came, and this stock is going up even more in 2024. So right now, I don't own any of this stock, but if a dip comes in the future, I'll be patient and I will probably add this to my investing portfolio. So those are my favorite dividend stocks in Malaysia for 2024. Like I said earlier in this video, please don't take this as direct advice to go ahead and buy these companies right now. I don't even own all of these names for my own personal portfolio. Just do your own due diligence. Like I said, I shared with you guys some metrics I'm looking for. You guys can use that as well and then go and find maybe even better dividend stocks that I missed out on. But what I do hope is that the Malaysian stock market and the FBM KLCI can do well in 2024. Actually, in the first 2 months, I have been tracking it quite a lot and the stock market is actually doing pretty good. So let's see if this momentum can continue for the rest of 2024 and we can have finally a good year for the Malaysian stock market. Maybe I'll even start investing more into the Malaysian stock market again because I really do want to support our country and see it grow. Anyway, if you guys want to invest in Malaysian companies like the 4 that I was talking about earlier, then check out Rakuten. Like I said, you can sign up using my link down below. You'll get some Rakuten points and you will support this channel. Thanks for watching this video to the end, guys. Give us a huge thumbs up and let me know if I missed out on any high dividend stocks that are great in Malaysia. See you guys in the next one. Peace out.